Hello everyone, this is Juan Sarmiento and today is Friday, May the 20th. Well, the last few days have been quite a shocker for most people, not for me I guess. If you take a look at the S&P 500, let's look at the futures on that. We have had a strong decline. This is a 30-minute chart, so it looks like it's getting stronger. Let's take a look at the daily chart. I think I have some trend analysis there. It's still in my area here of support where I expected the market to go based on the trend analysis, but of course it could still go lower, in which case we will be looking for the next target here at 127% retracement, and then 161, which should be the absolute maximum. Okay, but you can see that when the market was going up, you take a look at the stochastics, the pullbacks were short like this, incomplete for the most part. Now the opposite is true. The reversals are minor and incomplete. So you can't simply rely on the stochastics and say, well, now it's going to reverse and go to a new high. But I do rely on my trend analysis and on the Ichimoku cloud, so to tell me that we are in a bear market and things can get worse. And I expected the market to rally to the Ichimoku cloud. It didn't even made a decent rally here to speak of. Okay, so because I don't know the exact moves, how they are going to be, this is why, regardless of all my knowledge of technical analysis, it's very hard to predict the market. So I end up using the GeniTrade, or I ended up using the GeniTrade and stick with it because I know that I won't lose too much sleep over my investments, and that I know that even when you have a bull market, eventually corrects. Okay, so we have a bull market for many years, and now it is correcting. Okay, and if it's only, we don't know whether this is going to be it or whether we're going to test the lows here, and I have no idea. I'm just saying that because I see an important bottom here. It could be retested, maybe not, but you can see that even in the weekly chart, the Ichimoku cloud has been violated and it's turning red now, the leading edge of it. So we quietly wait until things develop, and as far as I'm concerned, the GeniTrade is the best trade because you don't have to lose sleep at night over this. What I'm going to do right now is going to look for those trades that I have and figure out a way to neutralize my deltas, which is a way to take profits, and wait until there is a bounce. Hopefully there will be a bounce, and my VIX, the volatility index, could decline and create new opportunities. But as of right now, is at the top of the chart here, near the tops, which is 35. It is right now 28. That's, I would consider that high. Take a look at a daily chart to be more precise on the VIX. It's important to follow because that's where we make or lose money with the GeniTrade. It is not absolutely necessary, but it gives us a guidance as to what to expect. And I'm expecting that this rally here on the VIX would eventually come down and go to the 20s, and in the 20 area is where we start looking for new trades. Okay, for the time being, all I have to do is the little 4 trades that I have, I need to adjust. Look at the chart for each one of them. I think Costco is dropping today and making new lows, and the earnings are coming up. here on the 26th. We had both Target and Walmart failing this week. They reported earnings and they collapsed essentially, and that's the biggest retailers there are, more generic retailers, and that could be a reflection on anything else, including, let's see, Amazon, by the way, since we are in the same field. Look at that. Oh, Amazon is due to split 20-for-1, so that, well, we would end up with $100 and a little a share instead of 21,000. That's good news because it makes it more accessible, and Amazon is one of my favorite companies. I wish I could trade. It's just too much money, even for a single Gini trade. So split is good news, but right now it's declining as well. So the main retailers in the US are having a hard time. So eventually you would expect they will reverse and go higher. But for the time being, let's go check our trades and see how we can adjust. Adobe. Adobe seems to be making a bottom here, perhaps or perhaps not. The stochastic is weak, even though it's going up, it is weak. Look at that, it's breaking below the average line, the blue line here. And of course, the Ichimoku cloud has been red for quite a while. So that is your bear market, and it could be tested, the Ichimoku cloud, and continue, but you need to see a big break above it before you can say we are in bullish territory. Right now we are in bearish, and we've been for quite a while. So let's take a look at Adobe. Analyze tab, and you can see that I have a slightly bearish. I have 400 is my long put, so I already took profits on it. We have the short call at 460. That's, yeah, this is really not much of anything. We have this put. Imagine this stock going back, bounce back to 460. Well, then my short might expire worthless and my calls appreciate again. So there's nothing to do here. I suspect that there's little value left on that trade. So let's go to the monitor tab and look for Adobe right here. And we see here that my current trade is worth $4,127. Let's go to the Analyze tab. How do I collect those? Well, we have a July 400 put. You could lower the strike price. Let's see if we did that. Analyze rolling. And instead of 400, we could go, let's say, go down to 390. Of course, the stock is trading at 398, and we're not going to use September, we're going to use July. Okay, so in essence, this is the trade we're entering, is bullish vertical. Oh, how come? Looks like my trade disappeared, what I had. That's strange. I don't see my trade here. Let's go elsewhere. Let's see here. Okay, let's go to the activity and positions and open here. Yeah, it didn't go away. It's just not showing in my Analyze tab. It should have, because I said show all. Let's say all groups here. Oh, there it goes. It was hiding in a group. Okay, so what do I do here? I'm essentially selling my 400 put, and which is taking my profits and opening a lower one in case the stock decides to keep on going lower. Except that I'm selling one that is worth $375. Let's see if I were to close that. Analyze closing. Yeah, $28.35 is what it's worth. So I'm taking that off and buying something that is not quite as expensive in order to get $450 back. Doing that would reduce my delta from 11 to 7. It's not that big a change, from 13 to 7, or from 1371 to 798. That's not that big of a change, is it? But this is a way to take some money off the table and still remain bearish in case Adobe decides to make a new low. And so we stay on playing this game. Okay, so let's go do that. Oh, let me just show you an alternative to that would be just to sell puts. Let's try that. Analyze closing. And we sell the put at 390, leaving the long. Oh yeah, I think that's a better idea, perhaps. No, it turns it too bullish. See what I'm doing? It turns it into a bullish trade. If I just simply sell my July 390 put and leave the 400, it gives me a lot of credit, but it turns the trade too bullish. I don't want that. I want to keep it slightly bearish. So let's do this. I'm not completely sold on the idea that we're going to go up from here, and so I don't have that judgment, and I just neutralize as much as I can in case there is a bounce. Okay, and I got some money out, and now the amount on my trade on Adobe here is now $3,700. So it will reduce by $450, about 10% of the value of it, and leave it in case it continues to rise. This June 460 call, that's going to expire worthless, and so is the long one in July 15, unless the market rallies strongly from here. Let's go to the Costco now. Okay, so Costco, what do we have? It's quite bearish, which is a good thing because I had minus 85, okay? And what do I have for a position here? First, let's look at the bears, at the puts. I had a 600 and a negative 600. So this is really a sort of a calendar spread, so it neutralizes itself. The call, I have two long calls and one short call, and they make itself like this. Is a bullish trade, but this, if you believe that this stock, which is trading at 412, is going to go to 600, very unlikely, but it is there, and I don't really care. It's not a big protection. And finally, then we have the single put here at 490. And 490, look how lucky we are, because in less than a week it's gone down from 490 to 413, and it looks like it's declining in advance of earnings. Okay, so what are we going to do? Well, we're going to roll it down, of course. And how do we do that? We select the put that we want to roll and then say analyze rolling trade, and then adjust it. So we are selling the long put that I have at 490 put here expiring July, and I'm going to sell one more close to what it is today, which is the closest strike price is 410. So I'm going to put 410 here, right there. And October won't do. We need to put this July. Okay, and we're getting $5,372 out of this correction, and here's what you end up. Still quite bearish. If you didn't do it, we have 85, and let's say you want to neutralize it in advance of earnings, you can reduce your strike price to 405. That gives you more capital, but it's still delta. Okay, so let's go further down then, 400. And we get a lot of money out of it, but it's still delta positive, delta negative. You can go even lower. Nobody's saying not to do that, and now it's $60. Let's do that, okay? That means that this put is $395. Imagine the stock has to go down 15 points to make it valuable. Yet it is worth something, but it's mostly extrinsic value, meaning the value that the traders will put on it, on a put that is so out of the money. You can just sell it, why not? You're getting a lot of capital from it, so let's do that. It might seem strange, but I just as soon do that. In advance of earnings, I want a tendency is to try and neutralize my trade. Okay, let's go to Nike now. And here we have June put, we have 3 of those, we have 3 longs, and we only have this bearish 115 put, and now the stock is trading at 108. We're going to do exactly the same. We're going to take our money out because, God forbid, the market can jump again. I don't care one way or the other. Sorry if you're bullish. Analyze rolling. Really, I don't know. I don't care to know. And my opinions I keep to myself. I give you some background of technical analysis, but I learned a lot about technical analysis, and in the end, I recognize that I know little. Okay, so let's go 105, and I mind you, I've been doing it for 25 years. 25? Yeah. 27 years of trading in technical analysis, and I still consider myself, I can't, figure out what the market is going to do. And there was a time in which ignorance was bliss, and I could pretend or believe that I could read the markets, and in the end you can't really. So I don't really know what the market is going to do, so I just adjust my trade, take my profits, and run. So I'm going to lower my put at 115 and put it at 105, and then I get $5.25, which is $525. Yeah, $525 in credit. And last, Oracle. That was the Nike got filled. And what about Oracle? Well, here we have, here my strike price is 80 and the stock is trading at 670, and my delta is quite high, so we need to adjust that too. I see that I don't have puts, short puts, so we could go that way. We have 3 long puts, and we can sell one at the same expiration as June 10 as the longs, the short calls. Okay, so let's pretend this, create this one here. I'm gonna go 3, no, 2, 1, put 80, June 10, and still quite bearish. Of course, this is buying, so I need to sell that. Okay, that's more neutralized. The delta is minus 168, so I'm going to reduce by 100 deltas. What if I sold 2? Okay, that makes it delta positive. Let's take a look at the chart. Do I believe that Oracle is going to continue on? It looks like it might by next week, but look at my line here. That was my support. It's now broken down. The Ichimoku cloud is red. The stochastic is going down after 2-3 futile attempts at breaking above the stochastic. So my technical analysis is telling me it could still go down, but I'm still not confident about that. So let's just at least sell one and say we tried something, okay? Because if there is a rally to 81, then we could even make more money still. So let's just at least sell the one we can sell. I just love the situation in which I'm simply collecting money and adjusting my deltas, and then the market can bounce up again and make me money to the upside. It's a very nice position to be in, isn't it? Okay, let me see if there's anything left. Go to Monitor tab. We still have the Costco. You can see that my credit that I'm asking is below the current market price. But you could still, if you say cancel, replace, you'd see that it's probably quite wide. Yeah, from 58.50 to 60. So we can lower our asking price to say something logical. Let's put 70. 59.70. And you can keep reducing it because you're taking profits, okay? And now we turn positive for the day. Let's look at the tabs here, the Dows and the Nasdaq just went negative. And so is the Dow Jones, quite negative feel to the markets right now. Okay, so what we have done is essentially adjust so that we are taking profits, neutralizing our deltas a little bit. If the market continues lower, will be great. Because we neutralize our delta, a jump back in the stock market to a higher level from here won't hurt us too much. It might hurt us a bit, but not a lot. And we have already taken our profits, and we might get more profits. So we can't, stop that when we are getting money. Stop that flow by neutralizing so much, by suddenly turn all positive or simply close the position. No, the market may go down for some more, and it is in a movement to do that. Okay, so that's all for today. You can see my profits for the year are 13,475. We started this account at 50,000 and it's now 105, and I will keep on going this. I think we can really increase it in the months and years to come. Right now we are at a point where we are collecting profits. We are not looking to enter new trades because we need to enter when we have low volatility. It's like buying low, sell high, where we're buying low volatility, selling high volatility. And right now volatility is high, so we are selling. We are getting rid of our positions, selling puts mostly, all right? Either front month or back month. It matters relatively little. What matters is their delta. The delta is what you need to look at. That's all for today. Thank you very much for joining me, and I'll see you next time. Bye-bye.